Hi, folks. It's Adrian, Cryptobirb, speaking on today's Friday webinar. Welcome. Bittersweet week. We've got some Bitcoin pump going on. However, we also got a sad news yesterday about the Queen Elizabeth II actually passing away. Deepest condolences right away. So there is a lot of ups and downs, turns throughout the week as we're entering into the very weekend. And there is definitely something to get ready for the next week as we are approaching triple witching day. If you're guys keen on learning and getting a little bit of here insights of the Bitcoin price action analysis, then you're in a good place. Feel free to stay tuned. We are going there right in a second. Like I said, let me start off by sharing my deepest condolences to all my UK friends on passing on Queen Elizabeth II. This is definitely a very saddening news to all of my great friends, and I'm really connecting with all of you and sending my best love and prayers. May she rest in peace as well, Her Majesty. And well, in all honesty, of course, we have to understand that there is a lot of fundamental events. There is a lot of macroeconomic events that the entire world is right now experiencing. We're all, of course, getting closer to the winter time, which is going to bring a lot of changes. I assume to the way that the energy performs, to the way that the energy prices actually move. There's been definitely some lots of ups and turns and an overall bull market, and how it all connects is going to be the answer to figure out what Bitcoin can do next, right? We've got a little bit of a pump today, and well, we have to understand always this broader context in a form of a top-down philosophy, top-down analysis breakdown, as we want to answer one of the main questions: where is Bitcoin going next? So here's a little bit of a rundown. So to kick off, we've got some nice follow through locally over the local rebound of the support of 31,000 points for the Dow Jones Industrials. Of course, while this is not necessarily the best, predictor to the entire market as a whole, I would argue that this definitely gives you, this Dow Jones Industrial Average gives you a little bit of a good insight into what stocks may be doing, into what average industry trends are showing. And it does seem that after a very deep retracement of the peak at after finishing the 200-day rally retracement, 200-day resistance trend line, there's been some deeper than usual retracement to the downside. The polarity change principle was not really preserved well. Otherwise, we would have bounced already somewhere around 1,000 points higher at 32,000 points. But we did not really do that. Instead, we actually fell lower to 31,000 points, which is, considering this overall size of the correction, quite deep, right? It is far beyond the half of this entire size of the pattern of the range of the June's lows up to August highs. And such a deep retracement is also seen, of course, on the S&P 500, which bounced, or I should say rebounded off, retraced off the 200-day trend at 4,300 points, even more perfectly, right? Of course, this is more likely than not an accident and coincidence rather than any perfect aims, and that is always going to be apparent and always seen in technical analysis, something like that. If it happens to be the perfect resistance, good. However, you should not ever anticipate that. Typically, certain levels work or areas work as supply or demand zones, as supports and resistances, because traders tend to aggregate and and layer down their bids and asks, which tend to act as certain opposing forces to the prior trends that last. So here, just phasing a little bit out of the resistance on 200-day average, we've also retraced quite deeply. However, this looks a little bit better if you ask me, for the way that these levels hold about 3,900 points, which is a bit better. There is this a little bit of a risk for the 20-day over 50-day bearish crossover, at least just by getting the extension of the currently going trends. But those extensions do not need to be actual. They don't need to realize per se, right? We don't know what's going to happen in future. Those are average trends, and they definitely got closer, right? This distance between the 50-day and the 20-day trends, has diminished, has decreased substantially, which tells you about this overall short-term trend slowdown, right? And well, in all honesty, of course, like I said, there is some potential for the bulls left out there just yet. uh, Still, this retracement, was fairly deep, and the deeper the retracement gets, the more it tells you the market falls into an actual sideways pattern more than a well developed and established trend, right? So I would be very, if I were to be fully bull and ultimately unleash the bullish forces in bits, I would be probably more cautious than not, right? But the fact that we are holding the supports, of course, this is pre-recorded pre-market, so take it with a grain of salt, especially once the market opens. But the fact that it's opening somewhere around the previous swing highs areas of June, July, this makes me a little bit less skeptical than I would be for Dow Jones Industrials, just for instance. Of course, if we go down and break it down by the sectors, then XLY consumer discretionary is actually rebounding off 50-day trend, which is good and fine. And if you compare that with the other trends on the S&P 500, just like I mentioned in a second ago, you're looking at a bit fatter deterioration, a bit worse deterioration. Here, consumer staples are rebounding or attempting a rebound of 72 points for the XLP. However, it's not looking too strong per se. Actually, energy is also trying to hold the previous swing highs areas, this some form of a polarity layer, that used to work as a swing high resistance area, that now is trying and attempting to flip into an actual support as the opposing direction actually just unveils. The direct impact of the energy prices getting more and more aggressive, getting more and more, I should say, um, restrictive. you know this works as a hidden tax. The higher the energy cost, the higher the energy expenditures you have to pay a cover, eventually the less disposable income stays in your pocket, right? And the less money you have to spend on your investment accounts, on your financial trades. So this is natural that the higher the energy prices go, typically the more liquidity it withdraws and takes away out of risk assets and risk markets. So typically this kind of like bearish for stocks. However, we know that there are some crazy rules, crazy bills attempted to be passed right now, also within EU. I'm talking about some limitations and energy limitations. Those are some rumors. I'm not definitely confirmed or convinced and 100% true. It seems ridiculous at the first hearing, but overall, there probably is going to be some policy implemented to tackle down the heating problem that we're going to have, this energy crisis, as we enter towards the winter. And well, if we go and dive deeper, I would argue that we have to realize and ask ourselves about the performance year to date for the energy sectors, for the energy sectors among any other sectors, many other sectors, broken down by the ETFs. So here we are looking at a 35% performance year to date, and the profitability return on the energy sector XLE ETF so far, with the second following a 10% utilities. And then we happen to have staples, right? So you can tell that the recessive stocks are still the main performance year to date, with energy leading at 45%, utilities 10%, and minus 5%, now, which is under the water, but slightly now for the consumer staples. And consumer staples and utilities both prove more defensive stocks rather than risk on assets, and defensive stocks surging or pushing, outperforming the rest of the assets, which is fairly clear and apparent, right? Because we have this clump of risk basket below at way worse performance year to date. Then arguably this brings you a little bit again of information about what the economic conditions are, and if the economic conditions are driven or reflected by the rally in the energy prices in the defensive stocks, then it tells me that investors are not really seeking for risk anytime soon, or have not been seeking for risk any time in the near past. And well, should that change, it has to be dependent upon the dollar. And the dollar is, of course, dependent fairly upon the monetary policy. So here, having this, FOMC meeting coming later this month, it's in September, and having this triple which is also something important to mention, which I will bring in a second. you know, Arguably we're looking at a fairly strong breakout on the dollar on the monthly chart. This is a monthly chart, and this takes me back to seeing and noting that current levels have not been seen for basically 20 years until like 2 to 3 days ago, right? We are talking about the levels that are as high as it was only 20 years ago, so 2002. Very direct, you know thought makes you think, right, that we are not just on a casual rally, we are not just on a casual situation, but this is a very unique placement. This is a very unique context for this dollar rally. And of course, it may happen then as we go deeper down the tightening rabbit hole, and there is more rate hiking cycle continuation, and the overall inflation, either does not come off or bounces back up, or basically comes down, comes off too slowly, then more and more aggressive rate hikes may be installed. However, short-term energy prices deterioration and natural gas prices deterioration may also be a subject to dictate a little bit of a slower rate hiking cycle progress, right? So as we actually focus, I mean the word the global economy has focused on tightening, and ECB, of course, putting 75 basis point rate hikes, 75 basis point rate hikes in July. Most likely, we're talking about 50 to 75 basis points also increase and target rate of 325 or 300 for September, which brings about 88% of target rate probabilities. That is what the investors fear. This is what investors are expecting, right? And well, of course, the market is driven by the expectations of future prices. The markets are not really discounting what's happening right now with the prices. Instead, it shows you what the potential future may be in terms of what it's seen in front of the investors' eyes, right? Their expectations directly build certain anticipation. So if there's 50 to 75 basis point rate hike expected for this month's September's FOMC meeting, and if we get, anything short to this, 25 or 50, arguably this may bring a little bit of a more bullish impact and work as a self-fulfilling prophecy. And as the market reacts better, such news eventually come back to slow down the rate hiking cycle a little bit. So this is a very, very complex, nature, of course, of trying to regulate the economy and how it works and accelerate and decelerate it gradually. It's a very big unpredictability out there. But the strong dollar prices breaking above the 7-year technical trend line flat pattern, range bound pattern sideways, and then looking truly at the 110 kind of like points resistances, which of course have a lot to do with the old regions of the distribution process that had taken that would take place somewhere around the dot-com bubble. Arguably, the strong dollar is not really the most positive thing that can happen and occur to the stock market, right? So as long as the dollar presses, the energy prices increase, the inflation is high, and the rate hiking cycle progress proceeds and continues, then I would argue that the risk assets are not really in the best position to change for better. And that is also, however, a little bit seen and reflected on the 5-week basis on the RRG chart. You can see, of course, a very strikingly apparent move up as Bitcoin improves from lagging quadrant to improving quadrant right now, and a very strong push on the relative momentum side on this vertical scale GDK, Julius the Campaner. Average momentum, relative strength momentum, which is the ROC, which tells you how fast it accelerates and it changes for the relative strength. There is still a relative downtrend down to S&P 500 when compared, again, with the benchmark 100 and 100 interception. We are far, far, far on the left, on the underperformance side, a relative downtrend on the relative strength side. However, this downtrend may soon, get a little bit weakened as Bitcoin may be more and more willing to rotate towards the leading quadrant, because there's more than not higher probability chances. As far as I can recall, it was about 90% of chances counted, calculated. Just feel free to dig on the specific numbers. That the asset continues to move around the clock, kind of like clockwise, to move and to switch to the following quadrant. So following quadrant to the current one for Bitcoin is the leading quadrant. But unless that happens, we have this still strong underperformance and relative downwards trend. We have a little bit of a sector rotation though, which is being proved but vulnerable. I'm talking about the leadership and the fact that the XLY, the consumer discretionary, which needs to lead a positive stock market, situation, it's falling right into the leading quadrant as much as XLK, which is which is the technology sector, of course, and the XLY, which is for the industrial sector. So arguably, there is a little bit of a sector rotation as we stepped away clearly towards the risk on assets and slightly off or still weakening of the defensive stocks, defensive assets, risk off assets, if you will. So the dollar is slightly worsened, of course, on the 5-week basis. XLU, which is utilities, XLV, healthcare, consumer staples, it's all escaped the leading quadrant and it's moving inside the weakening quadrant. However, it's still a relative upwards trend. On the relative trend basis, it's an upwards trend. And as long as it keeps outperforming the S&P 500, as I showed in this year-to-date performance chart, then this really does not pose as much threat, right, to them losing the control. Weakening quadrant is still a relative outperformance off when compared with S&P 500. So we have to be a little bit cautious when trying to pull any sort of like valid predictions. However, the fact of slowing of this of these defensive stocks, defensive baskets, basically losing a little bit of steam, losing on the relative strength and on the relative momentum side, as the risk on assets kind of like seem to accelerate. Well, this is more bullish than not on a 5-week basis, which falls under the category of a medium-term trend, right? So the medium-term trend has this averaged potential to flip more and more bullish in the coming weeks and months. I'll take it with a grain of salt, like I said, because this is nothing near confirmed just yet. However, I want to remind you to everybody that I host those Thursday spaces, of course, due to the death information about the Queen Elizabeth II, Her Majesty, passing away. We did have to reschedule. I decided to reschedule that, not to really interrupt my friends in mourning. And I decided to reschedule that for the next week. And this next week was supposed to actually tell you a little bit more about something that we know, triple witch, right? Or triple witching day. And if I go and find this triple witching insights, then what I'm going to talk to you guys is the very nature of this. And this triple witching day, what that is, it is basically a situation where when it comes with a simultaneous expiration of stock options, index futures, and index options. And here's a little bit of some interesting data rundown for you. And the seasonality accounted for the last 21 years, ever since 2001. The Dow Jones, on the day of a triple witching Friday, which happens to be next week, triple witching Friday in September typically brings and yields 81% of the time bullish results. So for the Dow Jones, for the 81% of the time, that they closed higher than it opened, which was bullish. Similarly, the S&P 500, the seasonality sheds light over 71.4% of the time to be up day for the S&P 500 stocks, large caps, and the Nasdaq a little bit more aggressive, risk-seeking take for 76.2% of the time to be up and bullish. So I would argue that while very, very big, significant part of the year is fairly neutral, especially for quarter three, or slightly negative, right, where you get not so much of a relative frequency or probability to go up as opposed to go down. Here it is fairly extraordinary day that historically over the last 21 years has been bullish in 70 to 80% of the time, 75% of the time on average for the stocks. So having 75% averaged, or of course individual numbers are there to be reflected, I would not necessarily probably bet against that, against historical records, right? If we know that there is a little bit of bullish advantage, perhaps we can use that and utilize that in our good intention. And as we can see, Bitcoin is really reacting well so far. As we are approaching into the weekend, it's right now trying to bring an attempt to break over $21,000 resistance, which I'm going to comment on in a second. But triple witching day typically is a good big event because of volatility. It means that while the stocks options expire, index futures expire, and index options expire on the very same day, it typically brings a triple as much volatility. And volatility means risk. And risk can be as much of a blessing as much of a curse. So feel free, guys, to actually, tune your risk accordingly, not to overinvest yourself, however, so that you stay somehow relevant with your positions. And as we get closer to the Bitcoin analysis, we are looking truly at this long-term chart where the correlation on the very bottom to the S&P 500 is at its 0.73 levels. So 7-week correlation coefficient for Bitcoin against S&P 500 is at 0.73. This is a fairly strong positive correlation. This tells me that more often than not, or more likely than not, Bitcoin is likely to follow whatever directions are given by the stocks, right? So whatever directions are given and dictated by the stocks, Bitcoin is more likely to follow them. And because this is what direct, strong, positive correlation tells you, right? Whenever it falls under the negative correlation, typically the stocks and Bitcoin trade in the opposite directions, right? And whenever it's strongly positive, just the way we've seen kind of like this past couple of months, staying above and fairly above between 0.5 and closer to 1, even 0.95, as well as I can recall, to the correlation coefficient on a 7-week basis. This definitely falls to make us think that Bitcoin is more likely to follow stocks, whatever direction they decide, right? So here, depending on the next bullish Friday, potentially having a little bit of the bullish odds, this may, through the proxy of correlation, come bullish for Bitcoin, right? I'm not saying that this will happen. I don't have a crystal ball. I have no idea. So take it with a disclaimer, with a grain of salt. Manage your risks depending on your risk preference profile. You have to acknowledge, of course, for the year-to-date performance of the other cryptos. So we have TRX USD at minus 20% year-to-date. We have basically XMR to date minus 40%. BNB to USD 48% minus negative. ETH to USD, which is minus 56%. Bitcoin, which is right below at minus 60%. Well, those overall records tell you that we're still, in a fairly negative territory, severely underwater when we compare that with the prices from the beginning of the year. And this gives us a little bit of context we have to acknowledge here for Bitcoin, right? And well, of course, there's more thorough analysis to be done here over the technical outlook. However, the very simplest way to look at it is, of course, that we are moving inside this major range between 70.6 and $25,000. As we failed to break out, right? We did have this approach of a breakout, this attempt of a breakout. However, this shaven tops, this failures on tops, this breakout failures actually kept populating and jumping higher with failures following, which contributed to this overall breakdown and follow through to the downside with a better performance in the opposite direction than just the pattern breakout in the initial direction, right? So here, having this extended tail to the downside, this really gives this deeper retracement to this entire pattern. So the deeper it goes, the more vulnerable it becomes for the bulls, right? So the bulls would love that, not first of all, to have really to had this breakout to the upside. However, we did get this rejection and the nasty follow through to the in the opposite direction. However, there's a little bit of hope as Bitcoin is trying to attempt this $21,000 breakout. And if it does manage to get that, because it may have the chance, right? And there's the strong improvement on the relative momentum basis, just like we've seen on the 5-week basis. It's still strongly underperforming S&P 500 and stocks, but stocks reacting bullish, potentially getting a little bit ready towards the next Friday's triple witching, arguably may get Bitcoin more bullish than not in the short term. Triple witching day is a short-term event. It's a short-term event trading day. Uh, it doesn't really have long-term implications. It only has short-term implications because it is a short-term event. So you should not probably expect or extrapolate that this is a beginning of a brand new bull market. There is still more likely a little bit more downside to come, but potentially you have to be ready for a sweeping of the lows below the June swing lows area at 17,500. It may happen that there is still this recession leg down to come up and appear. Typically, whenever the recession starts and when we're freshly into the recession, then you have a little bit more downside to follow. So I would not really rush to put all my money right now and just flood in, go all in into Bitcoin, just because there are some bullish odds on one Friday and there is a little bit of a breakout here while inside the range. You still have to understand that the bigger context is that this is a long bear market. And this bear market, which brings Bitcoin down to minus 60% year to date, and almost 70% down off the peaks, right? So this is definitely not the most convenient situation for the bulls. However, short-term bulls may get a little bit of a nice relief time. And you have to be ready for that, right? For the short-term relief time, as much as you have to be ready for the broader context and downwards bear market continuation. The fractal nature of trends makes it that it's possible for Bitcoin to be bullish, neutral, and bearish all at the same time. It can be bearish for the bear market, and the primary trend can be neutral because it's moving in a sideways on a medium-term basis. And it can be bullish because it's breaking for a local resistance to the upside. So bullish close over $21,000 is also going to trigger my own personal entry signal coming from the Burbicator Pro, right? Because this is the what I trade. As Bitcoin will, if Bitcoin closes over $20,300, which is this main threshold for the bulls to break over, then I would get my position to open and manage my risk accordingly in there, right? I'll probably try not to risk over my position sizes, position trades more than 2-3% of the risk on my entire account. So I would definitely weigh in accordingly to adjust my position size to it so that I don't lose more than 2 or 3% of my account, depending on where the stop loss placement is. This falls under the trend following system that I follow wholly with the use of Burbicator Pro. So long story short, of course, my opinion is fairly irrelevant to the market. However, the way I see, if we close over $2,300 or $21,000, this is short-term bullish for Bitcoin, potentially with a little bit of chances to extend it further into an actual rally, perhaps maybe even higher, maybe towards $23,000, $24,000, $25,000, maybe even break out higher. You never know. However, this triple witching day that is coming next week, literally in a week from now, is likely going to have a little bit more bullish than bearish numbers and odds for Bitcoin to continue, right? So there is some hope for Bitcoin. Not everything is lost. I definitely, I'm not going all in just yet. I make my slow long-term purchases based on a contrarian approach to the overall sentiment. And if there is a climax selling climax and selling desperation, I should say climax, then this makes me add a little bit to my long-term backs. However, for now, the closer over $21,000 is likely going to contribute to my opening a position trade for the next weeks, most likely to come, until it gets invalidated or closed in profit. As a trend follower, I will be wrong 70% of the time. I will lose 70% of the time, but I keep my losses small in order and wait for the larger tails to the market to develop. And this is where I'm right about 30% of the time to compensate for all the small losses that I have, because trends exist. The markets come with trends, and they come with big profits, chunks of profits, and clumps. At times, you just have to wait for it 70% of the time. So having all that said, guys, I really want you to realize that you as a trader have to follow very strict rule and discipline within your trading system, and the B Pro may actually give you an edge to it. If you guys want to go and try it out, then feel free to go and sign up for 7 days free on the free trial. No credit cards required. Go and flat with all the questions. I'm going to do my best to reply there. God bless you all. Sign up for 7 days free trial in the Burb Nest. Join in hundreds and thousands of traders who've been there and improved their trading skills and their personal overcome their personal difficulties ever since 2017. Don't take my words for it. There are tons of people who actually got their help they needed, and who really did manage to tackle all their problems and, well, became profitable traders, right? So I'm giving you a chance to take a benefit of 7 days free trial. Go ahead and sign up on theburbness.com/free dash trial, free dash trial. And guys, if you enjoyed this webinar, feel free to leave a thumbs up on this video on YouTube. I want to make sure that you feel all appreciated. God bless you all. And I see you around on the next videos. It's been Adrian Cryptobirb talking to you. Bye bye. Stay safe. Take care.